What's up, everyone? In this video, we're going to be talking about a pretty solid company that's at an awesome price right now that has a lot of potential for the future, and it's just looking pretty good. So I did a good amount of research over the past couple of days, and I just want to share it with you guys really quickly because I think it's a pretty good opportunity. So just looking at the market overall, it's been pretty volatile lately. You know, if we look at the S&P 500, maybe over the past 30 days, it's basically just been flat, right? Like, we tried to break all-time highs, and we did for like a second, and then we came back down, and, you know, we're seeing some growth companies continue to get destroyed, where we're seeing some other companies, maybe like Nvidia, that everyone knows it's a solid company, but it's just like at a very overextended level, and it's just like we're in a tough market right now, to say the least. There's been a lot of volatility and a lot of craziness happening. You know, I know that there's also been at least increased fear with the Omicron variant and all that stuff. And if we look at some of the vaccine companies, Moderna has been doing okay, but I would say the big winner has been Pfizer, which has just been exploding. Over the past couple of months, it went from like $42 up to basically $62, which is a huge run up for a company like Pfizer. But it's like, at this point, do you want to be buying in? Like, I'm sure Pfizer will do great over the long term no matter what. They're such a huge company and they're very profitable and all that, but it's like, do you really want to be buying in after the move already happened? And yeah, sure, it might be good for some short term like momentum trades, and that's awesome, but you know, for like a couple month hold, it's probably not the best time to be buying in, especially given everything we have going on in the world and just the market right now. But I think there are a couple opportunities. I covered a ton of stocks in yesterday's video, but one stock I really want to focus on is Zoom. It's at an amazing level right now, in my opinion. It had a great day on Friday, but like the more I look into this company, the more I just like it. You know, they're a solid company. They're a tech stock. They benefit from any bad news with the virus. You know, we could see just the other day, we had news from Apple and then even Google, how they are delaying their plans to return to their corporate offices. So, you know, this news came on CNBC the other day. Initially, Apple workers were set to return to the office, I believe, on February 1st. But that's not the case anymore. They're just, they don't even have like an official return date set. So, you know, that's not good. And what do you think what happens when all of these, like especially huge tech companies, when they're not like going to physical offices, they're doing all of these meetings online, whether that's Zoom or Google Meets or Microsoft Teams or whatever, like, you know, like they're working online, and that really benefits Zoom. And it's not just Apple doing this. Like, of course, Google's doing it too, and other companies across the world, but it just goes to illustrate a point that, you know, when we have these new virus fears happening, Zoom has a lot to gain from that. And on top of that, it's not like Zoom is just a, you know, COVID play. Like, they're a very innovative company. They're a tech stock. They have a ton of cash on the sidelines. They also have potential to expand with like the metaverse and all that stuff. So I did a good amount of research that I'm going to share with everyone, but it just goes to show you that we're at a point right now where the market is kind of shaky, and Zoom is at like a really good level where it's looking pretty good. And especially when we have catalysts like the Omicron variant surging, it can definitely help Zoom, because if we look back throughout history, let's say we go back maybe 3 years, let's say we go back 3 years on Zoom, you know, it was just like bobbing back and forth before COVID really exploded. But once the pandemic hit, like Zoom, it exploded. You know, it went from, you could say like $70 up to $588, which is insane. Since then, it has pulled back, but their revenue is surging. So if we go to Yahoo Finance really quickly, I know a lot of people were kind of like hating on Zoom. They're like, all right, well, what happens when the world reopens? But it's like, Zoom's earnings are surging. They are like, if we look at this chart right here, we can see in 2018, the revenue was $151 million. 2019, revenue $330 million. And it was growing crazy before the pandemic even happened, is the thing. In 2018, the revenue was $151 million. 2019, $330 million. 2020, $622 million. 2021, $2.65 billion. And then on top of that, the earnings are surging too. So it's not like they're just making a bunch of revenue, or it's not like their revenue is increasing and their earnings aren't. Like, their earnings are really exploding too. And on top of that, they're beating their own estimates and Wall Street's estimates. So if we go back to Thinkorswim really quickly, we go to the Analyze tab and then earnings. This basically shows you the past couple of earnings reports. What I really want you to focus on is this yellow and green line. The yellow line represents the EPS that Zoom reported, so the earnings per share that Zoom reported, and the green line represents, well, the data that Thinkorswim sources from the Wall Street estimate. So we could see the yellow line is always over the green line. What does that mean? It means Zoom's doing a lot better than the market is even expecting, even though the world has been reopening. So it's like, even though the world is kind of returning back to normal, Zoom is still, they're doing very, very well. And then we still have this news of the Omicron variant surging. So it's like, Zoom's looking pretty good right now. And there were another couple things I wanted to showcase. One of them being is that their earnings are really good. Like, you guys know I'm a huge fan of DraftKings and other growth companies. But if we're being completely honest, Zoom is a much more established company than, let's say, a DraftKings, and they're in a much better financial position than DraftKings, and that's always good to see. You know, there's nothing wrong with buying a growth stock, but it's also nice to know when, you know, you got a company that's printing money, changing the world, and then on top of that, Zoom has $5.4 billion in cash. That's pretty good in my opinion. On top of that, they have a relatively nice profit margin too. Like we could see on FinViz. FinViz has Zoom's profit margin right around like 28.4%, which is pretty good. You know, it's a nice high number. If we compare that to a company like Apple, we can see their profit margin is like 26%. But then again, Apple's a beast, and you know, it just goes to show you, like, Zoom is it's a solid company. So I really like that. Again, it's used by so many people across the world, and I guess you could say over the past 2 years, all of the viruses and everything going on, that has only helped Zoom. On top of that, we could see a little, I guess you could say, graphic right here showing the different web or video call platforms in their respective market share. We can see Zoom's market share is pretty big, especially on this I guess you could say, study. From all of the studies I looked at, Zoom is leading the market share by a fair amount. We could see Zoom, according to this study, has a market share of around 48.7%. The next closest competitor is Google Meet and then Microsoft Teams. So, you know, and they're only growing. So I just really like Zoom at this level. On top of that, you know, it's nice to see all the data I pointed out, but it's also nice to see what the smart money's doing. So I pulled up this website right here, hedgefollow.com/stocks/Zoom, and this basically shows us the top 20 shareholders of Zoom. With that being said, you can see 1, 2, 3, 4, 5. 5 of the largest shareholders in Zoom are increasing their positions. I think that says something for sure. We can see like Tiger Global Management, they are increasing their holdings by 11%. The total value of their Zoom shares is around $1.25 billion. You know, of course, we do have some whales cutting too, but for the most part, they're buying the dip, which, you know, it's always nice to follow the smart money. On top of that, their recent earnings were pretty good, and like more important than anything else is the price that it's currently at. It would be different if we had all this good news and Zoom was at, you know, let's say $475, but it's at $200. It's at $200 a share. So I really like it. You know, this does not mean it's the bottom, but it's used by everyone. They're a technology play. They benefit from the virus. They have a ton of cash. They're changing the world. And down the line, they have potential to innovate in, you know, I guess you could say like join like the metaverse, if that's how you want to word it. They have metaverse potential. We can say that. They're used by everyone, like I said. They're beating earnings. They're beating their own estimates. They're raising their guidance. Their earnings are not slowing down, even with the world reopening. And then even if the world does close down a little bit, a lot of other companies might get hurt by that. But Zoom's one of those stocks where it's like, it wouldn't even hurt them. It would actually really help them. So, and then on top of that, their largest shareholders are buying more. So with all of that being said, I really like Zoom right now. I think they're a solid company. And like I said, this does not mean it's the bottom, but I feel like they're very versatile. And of course, this investment is a little bit risky. And investing in any individual stock can be risky, but I feel like with all the opportunities right now, with Zoom at this level, it's hard to skip over it. So with that being said, I really like it for shares. You can mess around with options if you wanted to, but the problem with it is that the implied volatility is like 62%, so you'll be paying a decent premium for that. So definitely keep that in mind. Some other, I guess you could say, COVID plays are also at relatively low levels, like Fastly and Teladoc, and I guess you could say even Peloton is at a pretty good level. So if you wanted to just like buy the dip on some of those too, that can be good. I was eyeing up Teladoc and Peloton specifically, but out of them all, I feel like Zoom is definitely in the best financial position. And then on top of that, they're changing the world, and the world is changed so much over the past 2 years especially, and everyone knows what Zoom is for the most part. Like everything from, I guess you'd say, education to courts to business meetings to everything uses Zoom. Or not everything, but a lot of things do. So with that being said, I really like it. Let me know your thoughts on this. Let me know if you still think it's too high, if you think it's a good deal. Let me know. But thank you guys so much for watching, and have an amazing weekend.